Hey, what's going on, guys? It's MC Fire here. We've got about 2 minutes before market open, and we let out some potential plays for yesterday. We just want to kind of bring to the front of the classroom that moving forward, kind of with the way things are elevated, you could see. We'll bring them to the front of the classroom on the cues. Minimize this and get off the daily chart. That even though serious woes sent into the market, right? The market and its ability to recover, close the gap, so to speak, it's relatively high, right? This is like a red line, meaning it's very relative. We're playing around with relative highs here, and you're seeing here that that large candle that it might reject and kind of rotate back down. That part is again getting tested. So highs could be in the work here. Potentially. Let's say you took profits on the way up. Nothing wrong with that at all, for sure. But the potential for more highs is there, and waiting for a pullback is also pretty good, right? But yeah, I just wanted to bring that really to the front of the classroom. That a lot of people will get excited, not excited, emotional about pullbacks, which is the natural course for the market. Pullbacks are a sign that whatever you wanted to buy is on a discount. But we're going to take, probably moving forward, some of the more cleaner setups, some of the best setups that we can see. We're trying to kind of refine our playbook to find out which works absolutely the best and has a very clean setup. It doesn't necessarily mean that when we take a play that the risk to reward, we're going to offset that. What do I mean by that? Meaning we're going to skew more capital or less capital to some setups. Now, there is certain tactical reasons why, scaling in reasons why you could allocate more resources. Maybe you entered, it pulls back, and confirms that the trend is actually going that way. Well, you get a good look, right? You get a look where you say, okay, I got in for my entry, it pulls back, then I get in for more. That is a thing, right? That's almost like you trade them individually, but you focus focus on that second trend. So here's a market open. We'll kind of see how the market reacts on this major trend line. Again, it comes testing up in pre-market and almost immediate rejection. The only issue is that we could potentially see it buy back pretty quickly if we can get some momentum moving to the upside, because it had no problem coming up here and testing that. There is going to be some early profit taking here. We're also waiting for, we had some really good looks at some plays potentially yesterday. So you had like stuff like Hood and some other really good plays that we were looking at with Q yesterday. Well, I'll see if that stuff really plays forward today. One of the ones that we're looking for potentially XLP. Wanted to potentially see that cross the threshold to the downside to give us some market exposure to the downside. Right, this is a downtrend. With the moving average cross on the weekly 21 period moving average actually trending down. Nice pullback here, healthy pullback here, and a nice setup candle. And I know the situation where we want it. So the first one, we see ED above a certain level. We'll go pull ED to the front of the classroom. Okay. 21. Now we did make a good amount of profit on ED to the downside here. We did put a alert up here because I wanted to see if it was going to break that pivot and kind of ride up to the upside a little bit. We did have this negative candle here, but hypothetically, I was like, hey, if you entered into this to the downside, this would be your stop out, right? Just to give you a heads up, stuff like that. But yeah, we made pretty good significant returns on ED to the downside, rolling it for multiple weeks. Is actually, we closed it here, a lot more money on the table. You never really know, but we took the highest probability with the blowout there, which is really, really good. multiple rolls there on ED. This is kind of what you want to see. Downtrend established, there's a rip, and then now you can confirm that the market is wanting to trend down after that rip, right? Buyers kind of get exhausted and the momentum kind of takes over. Here you might be looking at potentially a trend change on ED, but that just popped up in the alert and in the message tab. Let's see what else we got from the messages. And it's about ED, Lily. Yeah, okay. So yeah, pretty much ED. This is good. We like somewhat quieter markets right now. It doesn't have to be super volatile. Happenings. Right? You got K-Web. K-Web is one though that we have been watching. And we're in. I remember I told you guys yesterday the order block for K-Web. So what we could do now is we'll go ahead and we already have one for 7 days. We will scale in to this, believe it or not. We'll get another option contract for K-Web here. And we'll take a quick buy. It won't be a very large one. We'll take a buy, and then we'll take, it's at the 50, and we'll take another 20 delta here. Take a 20 delta, sell against it. And there you go. So since we're scaling in, we'll just go ahead and acquire one. Kind of told you guys about the order blocks there from the video. If you didn't watch the video yesterday, please go watch the video yesterday. It was actually pretty jam-packed with quality looks. New playbook ad here, and we talked about that in K-Web. It's probably pushing, but I'm going to leave mine there because I wanted to go ahead and pull back slightly. Probably will pull back a little bit here. Yeah, we kind of wanted to pull back. It's being kind of peekabooed in there, and then we'll take a pullback. It'll be sweet. But the idea here for K-Web, the idea is we bought here. We'll bring it to the front of the classroom. We'll minimize this as well. The buy was here off these setups, and it was going to be a trend change. Now, trend change, when you're in doubt of a trend, like let's say right here it's red, but the 21 period moving average is up. So when in doubt, 21 out. That's our model here. The 21 period moving average trended up, even in a downtrend. Really, the 21 moving average will go neutral. The 8 period moving average typically will trend down. Now, it's a lagging indicator, so if things get hyper volatile the other direction, the 21 will gradually shift up, like on the very tip, not like obviously back here or something, but it will shift up at the very tip. And the 8 period moving average is maneuvering to the upside and crossing green, right? But the 21 period moving average never really started going down. It was just neutral / up. So, you can bend the rule there to kind of be flexible. But when in doubt, 21 out. And if your 21 period moving average is negative, well, then you're definitely in a downtrend. And so you gotta have like a clear rule for what you want to do there, and that's kind of what we're giving you, right? We just have very clear rules. It doesn't have they're not all your rules don't have to be perfect, right? But having good rules is how you separate yourselves from the animals, as I heard somebody say. But you're out here in these market streets, and you want to just have a really cool playbook of things that you can do. So we have the roll here. We have the new buy. We didn't buy out like 3 weeks. We're not looking for 3 weeks, maybe another week to the upside, so to speak. But the stop out is going to be the same, right? Be a 2-bar professional here. Look at the pivot there as a low, and then we just let it do its thing. Yeah, like we kind of told you guys that this is one of the ones that we were looking for, order blocks there. I forget which. I think it's SMCI. Yeah, we'll bring SMCI to kind of recap the video from yesterday. But like, what we noticed is in these uptrends, in like the middle of the road here, if you're looking for almost like a bull flag, you see it push, and then there's this green, red, green kind of a pattern that forms, kind of making a mini squeeze or a bull flag. which is essentially a mini squeeze. Um, at like a relative like middle of the road area. You're between the cloud and 3 ATR. Kind of this one is a little bit more towards the moving average side of the equation, which is really good. We're kind of resting on the moving averages before it explodes to the upside. Hoping to see that a little bit in the K web there. Also, it did have the catalyst of earnings, so having earnings doesn't hurt either. But really, shout out to Oliver Velez for coining this, what he calls red bar ignored. If you've got a green bar, and then you got like a slew of red bars in the very same vicinity, and you get a green bar outclassing those red bars, that is red bar ignored. You're sandwiching, the red bars, and on top of that, you've got a GRG, green red green, where you're sandwiching the red bar in a very tight spot with a green bar in the context of a like bull market, right? So you're looking nice push, green bar, excuse me, and then a couple red bars in this tight compact area. Doesn't really break the low of this candle, doesn't really break the high of this candle. It's just very tight. And then as it actually breaks, you could trade that break to the upside, right? So pretty cool stuff. So we go back to KWeb. You don't necessarily have the defined, green candles there, but they are there, right? So you do have, this sets in, you can consider this a juicy green candle, right? This opens, closes here and opens here. So nice back green candle here, series of reds, opens here, closes down here. So this doji, it just means to me that there's a real fight here at this $36 level, and as you break above that area, peekaboo, so to speak, it has the potential to go to the upside a little bit more. Doesn't mean it will. It just means that you get the alert that people are interested in buying at the level, and of course we'll stop out if it breaks below that level. Rotating inside of here is totally something that it can do, and so any stop out in between this level to me makes literally no sense, because this is your rotational zone. So we're looking for it to trade trend, which is build orders above its rotational zone and then push. That's typically the birth of a lot of trends. You'll see that pattern kind of set in. It'll be above rotational zone. Orders will start to, price action will start to form on your charts above that rotational zone, and then it'll start to push higher. And we're seeing that here, right? As the more time it sits above that little block that we've kind of laid out, doesn't mean that our block is perfect. The system profile will probably make that like way easier to spot, but as it spends more time above that area, that's a lot more prominence to pushing more to the upside. So we'll just let that play out, and we'll see what happens. Adding on there, kind of in the middle range there, but wouldn't mind taking a little bit off the table for both of these as the roll, as well as the new one we got as the add-on. So the overall market, though, as you can see, is rejecting off of this level, off the highs there, which is, buy low, sell high, which is what the market should be doing. The market should be rejecting off of highs. Now, this doesn't mean it won't make higher highs, but you just got to watch it, right? I kind of want to be there for stuff like watching what it does at highs. What's the market's appetite for new highs? And we're seeing it currently not very appetizing. Now, what it could do, what we could see is potentially you've got this level set here, multiple tests down here, so it could pause at this location and then look to if we start get a wash of these candles right here, we could see a bounce back up in the VWAP. I probably don't think it will retest the highs, but it could test VWAP and then fail, or it could test VWAP, test VWAP again, and then maybe test highs. Don't think that that's a more unlikely scenario, but I do believe things don't just sell off forever. With a massive sell off that you're seeing here, reversion to the mean could be in play here. But yeah, you've got pretty massive push to the downside here, off the open, and then definitely you got a red cross there as well. So we'll trade this, very similar to the way we trade, uh, on the daily and the weekly. We are in a clear divine downtrend, right? It's going down, and then when it retests, rips, so to speak, we'll be looking to take a continuation trade to the downside. And it happens a lot more than people think, right? You see this push to the downside. Here's your pullback, and then you just trade it, trade this setup back down. This was, I believe, just yesterday. We'll bring that to the front of the classroom right now, kind of show you that it happens a lot in the market. It's not new, right? You see even in the morning. So the beautiful thing is their setup actually formed in the morning. So you got some reds, series of greens stacked right here, and then those greens got washed pretty handily by these two candles, one of these extendedly large candles. So once it breaks those greens, the buyers are kind of exhausted, and it fails. And then where does it recover? It recovers back to essentially VWAP. Recovers to VWAP. You see your whole change. Now there's no setup candles there, but you do see your whole change, whole moving average, and then it starts trending back to the downside. See some buyers kind of step in here. We can almost take this. We'll just take a quick buy up there. And call for her. Let's get her, see if we can get our beak wet here. Cool. So bot filled one option contract, calling the queues. We are trading off of this reversion to the mean, just seeing if we can get back to looking to get back to VWAP essentially. And where's your stop? Well, you want to respect all your buyers, and we'll put the stop below the low. A lot of the day trades, because if I put if we do all the day trades that we wanted to do, and we kept the arrows on, a lot of times I would, I just have like a whole bunch of arrows. So probably not gonna keep those on right now. I'll keep them on for you guys right now, but typically I don't keep those on. So I always have the order kind of queued up down here, just so you guys can kind of see it. I might change it from limit to market, so we're not just get out at market order. The spread might be a little wide, but for this, I'd rather get out than be fighting for it. Yeah, we just wait. It's just kind of, it either goes up and hits VWAP, or it comes down and taps that level for the stop out there. This candle has some legs. See if it follows through there. Nice. Buyers are stepping in, which is good. You'll see a lot of heavy volatility in the morning. Remember, we are trading against a trend, so not looking to be too much, to be too picky here. If we can get up to VWAP, that'd be nice. kind of let things play out here. Could play out in our favor, might not. You never know. A green candle. So if we can bring in some active trader action to the front of the classroom. See how this profile builds up. Go ahead and let it go. Sweet. So nice little scalp there. Like a 2-bar scalp. The reason why I felt pretty confident in pulling it is because your next ledge is like right here. We're crossing over these ledges. There's a ledge. It's new. I mean, the next biggest ledge is up here for markets to get to, which is VWAP. But you got this ledge that is the widest, and that we're already at it. So that's kind of why we pull this up, just to see where's the gaps, where the ledges. In other words, where have markets been? Where's the most of the buying and selling happening anyway? Is it likely to just go past that, or is it just going to settle here? Because the market has already shown that it likes that price. It likes executing orders at that price, right? And remember, again, we're going against the trend. So first sign of danger, that's perfectly fine by me. There could be more meat on this bone, but that's not the optimal setup. The optimal setup is a reversion to the mean, to the VWAP. Now, if we can get a trend play, right, let's say we get a couple of greens, a tight green set in here at VWAP, and then it crosses to the downside. Cool, we could definitely want to play that. And there's a nice slap to the downside as we made sure we exited our position. But that's kind of the point, right? You're using the tools at your disposal to kind of showcase, hey, I could take a nice little 2-3 minute scalp there and just use these tools that are given to you for free, but knowing to use them is extremely important. And you can kind of see what happened. It traded up, and you see where the market liked to execute price. So you're asking sometimes, it's nothing wrong with your trade idea, but you need more data to support what you're saying, support your theory. And in this case, it worked. Sometimes, the market could print more orders and buyers could really step in. But we looked up, we saw that, hey, the market likes to make print orders at the level that we were at. Where is that? There it is, 86K level. Okay, and it slapped back down. But what was it doing? As it pushed up, we looked and we're like, okay, you're at the level where it liked orders. Like there's a block of orders right here, and pushed up into these orders, and pushing past it is going to be extremely difficult. Now there's a huge surge in buying, and most of the time it'll just blow past that block, right? But it didn't. It came up to the block. What did it do? Sell off. Came up. There's a block. Reset. Nope. Perfect. Let's get out. It's at VWAP essentially. And then boom. More price action to the downside here. So good prompt exit at market. Really nice. Boom, boom. And nice little scalp on the day. See what passive orders are sitting out here. Got a lot of passive buy orders down in this range, right? A lot of passive buy orders just sitting down here, and I get 94 down here. It's changing, right? But there's some orders being set down there, which is good. Okay. Yeah, there's a Qs. There's not really any too many alerts going on, which is fine. We're not we're waiting for something to come to us. But negatively, like they're essentially the plays at two standard deviations. So just absolute just like rushes to the downside. Don't really see that right now. Um, it is what it is, but don't really see that right now. Just playing out. Now it could start pushing to the downside if you get. I mean, you did get this pullback, and then there was a nice slap to the downside. We exited before that happened, and rightfully so. Right? Again, I kept saying it's a reversion to the mean. It's a reversion to the mean. You don't need to be looking for it to test high. Now, for it to do that, you're going to need it for it to break VWAP, retest potentially, and then push to highs. There's price at right there. We can actually we'll zoom out a little bit, see where we are on profile, right? And all this really on over here, this is a feature that they have called Active Trader on Thinkorswim. We really only use this for this little portion right here to kind of see where the previous orders for the day have kind of manifested. And these blue bars, as more orders get placed in these areas and get executed, it counts for it. So it's almost like it's visual ledger, so to speak, seeing how many people bought at what price. It's very similar to your volume charts on the bottom here. You just turn you turn that picture over to the y-axis, and you are now represented versus price. So what price did most of the buying happen, most of the selling happen, and so on and so forth. So this ledge right here is a lot of buys right here. We were one of those, and then pushed up to this ledge where we exited, and it just kind of moves from ledge to ledge where the price likes to get to, so to speak, and reject off that ledge and run through the gap to another ledge. Just patient here, just waiting for something to develop. Yeah, not too much going on. Just watching the market. We can go jump over to the oil market. We'll go look at CL, like through crude. All right, futures over there. Yeah, that's sell off right there. RTXY, Russell E-minis. They're probably going to pretty much be doing the same thing. But if you notice, right, E-minis sold off pretty heavy and never really gave an opportunity to get back to VWAP. So strength-wise, here recently, the ES, the Qs have been relatively a lot stronger. They've been pretty strong. Right, it was actually able to at least get back to its VWAP before it sold off, whereas the Russell, you see, kind of didn't. ES struggling. ES is struggling. That might be all we get, guys. Might be the only good setup we get. We'll see. Being patient, being patient, being patient, and being patient. I'm gonna say it like this to a lot of people. Like if trading, if you're having a hard time with trading, or you wanna, what I've read from a lot of really good traders is the hardest thing is what to do in the downtimes. It's not really the executions. It's what to do when there's nothing to do. And so that's really where people get hung up. They see something and they're like, oh, well, I mean, I'm not doing anything right now. Let me go ahead and just put this straight on real quick. It's not exactly, um, that's not exactly what you want to do. You need to find, like, in your mind something to do while you're waiting for your setup to develop. So right now, even as we just watch the market and watch how it moves, I'm watching how the profile is filling through and seeing, okay, there's a lot more orders being made down here at this bottom portion. The market is relatively heavy here, and so as it it comes back and tests up, it starts getting more orders and it starts filling more to the downside. There you go. And so, nice slap that comes up and you get slapped to the downside because, maybe buyers get exhausted or whatever. Um, yeah, we just watch how the market moves and be enamored by its movement. And just being patient and seeing how the market moves. Wait for your setup. We got our nice reversion to the mean setup. Nice little clean bounce. Got in. So we wanted to see. Got out. And trying to see if this one's prints as a pretty massive volume candle there. Because it moves so violent. There it is. Yeah. Let's see what the ES and the MES are doing. Where we at? Ooh. Ooh. Look at that. That slab for the ES was intense. Where is this? Up here. More orders, most of us. Probably more pre-market. But yeah, essentially approaching the lows from yesterday. Whatever buying happened has been erased. That's the selling coming in. This is eventful though. You had a nice, what I like to call a hammer wick candle. Looks like a giant staff with a hammer in there. So the wick makes it look like a hammer. People call it a morning star or some other Harambe pattern or whatever. If it gets up here to be a Harambe pattern, but it's not doing that right now. You do get a hammer wick. So if we do get up here forming a Harambe pattern with a hammer wick, typically considered a pretty bullish setup. At least you can take that to view. Not looking like that's the case. Just watching this volume profile fill out here. Sellers are getting pretty aggressive here. To me, this is awesome. Just thinking about the mechanics and what's actually happening behind the scenes is what is the market all day, day in and day out. It is a difference in price. It's a bid, and it's at a price. People are bidding. One person maybe want to sell their goods at highs, and the other person wants to buy low, and they're coming and meeting at a price in the middle. And this happens all day in the market. These are orders for people to sell, and these are orders down here for people to buy. And the buyers would like to buy at a decent price. Some people are willing to buy at this price. Some people are willing to buy at this price. Some people are willing to buy a little lower. And it's happening every single second of every single day. And when a market buyer and a seller meet, whether the seller comes off his price or the buyer comes off his price, moves the market. As less prices become available at this level, then who's getting more aggressive? Are buyers looking to get it more aggressive, or sellers looking to get more aggressive? Like sellers are being very, very aggressive. Just gotta be patient here. Want to be more of a contrarian, but as you can see, we're not in the trade to the downside. Why? Because ideally you'd want to get in at the rip and then the follow through to the downside. And so let's say, for example, for the Qs, because I know somebody will say, well, you could have took that position to the downside and you'd be making way more money. Well, even though that might be a very true statement, right? You could argue that over here. Yes, I could argue that for sure. Nice drop, rip. Look, you're already set into the downside, right? Pushing down. Nice rip. Take the entry, break of the low, stop out at the high, and it continues to move to the downside. Absolutely, yeah, that could definitely be a thing. But we saw these people were isolated, stacked nice and tight here, coming off their positions. That was very likely also. So in the ebbs and flows, it's just, a different way to trade, right? Nice push to the downside, pull back in the upper half. Yeah, very highly probable. Actually, according to Oliver Velez, 75% probability that this will continue to the downside for sure. It's why we didn't take that for more, and then we also brought in our active trader. But yeah, this is a good trend to the downside. It doesn't mean we have to be in it. We just take what we can see, take the opportunities that have been given to us, and there you go. In the big schema of things, right, this is where we are. Pretty far away from the moving average cloud, and pullback at highs is probably in order, right? Seeing some distribution potentially sitting in here. So yeah, definitely could pull back from highs. We took this day trade in the scheme of things the opposite direction. And yeah, in the big scheme of things, could go down here for sure. It is going down. But the way you trade it is still the same. You short into the rip and then you buy the dip. Well, as it pushed away, 2 standard deviations, set up, boom, push up. But here, right, you would short the rip. So we're waiting for what? We're waiting for a rip. And you just got to be patient for the rip. Here's a rip. Here's a rip. There's a rip here. But this candle was a little wide. Now you could take the break, stop out at the high, right? Kind of almost the same risk to reward here as this one. You could take that, boom. Nice lap to the downside, and then pretty hefty fall through. There's also a blowout candle here, which you could exit very promptly if you push to the downside. There, you probably could have exited at way outside 2 standard deviations for a nice scalp there. So what do I think will happen probably for today? If we get a pullback in the VWAP, you might see a green candle, like nice little hammer green candle set in here, and then probably a retest of whatever pivot low there is. But guys, thank you so very much for tapping in with us. That's all the time we have for today. You guys got to see us take a reversion to the main scalp, even in a wider downtrend. That's really what I saw from this right here. Some weakness in the selling. Briefly to reversion to that VWAP. Ideally, would have loved to get this one. That would have been a lot more cleaner to the downside. But you know, seeing the moving averages set in here, boom, that's kind of lagging. But yeah, it was still there. You know, early trend change to the downside. Take that first rip and then break of this candle. I wouldn't know how much meat is on that bone though. Like when you're this early, you don't really get to know how much meat is on some of these plays until you know more orders kind of set in. You don't know if the other team's going to be like that dominant moving forward. So, but yeah, you might get that reversion to the mean setup here in the future. So, guys, it was nice to get to see a winning trade there. Although be it against the trend, but you know. We took what the market gave us, and we're happy for it. So, guys, thank you so very much. You guys have an awesome day. We'll tap in next time, and goodbye. Peace.